Welcome aboard. Let's do an analysis of Johnson & Johnson, or J&J, by including a summary of its fundamental business operations and the impact of the talc lawsuits alongside the technical analysis. Business fundamentals of Johnson & Johnson. Johnson & Johnson is one of the world's largest and most diversified healthcare companies, with three primary business segments. First, pharmaceuticals. This is J&J's largest revenue driver, contributing over 50% of total sales. They focus on key therapeutic areas such as oncology, immunology, neuroscience, infectious diseases, and cardiovascular metabolism. Next, medical devices. The second largest segment, J&J produces a range of medical devices used in surgery, orthopedics, vision care, and other medical fields. This segment is essential for the company's long-term growth, particularly as elective procedures recover post-pandemic. And then, consumer health. This includes well-known products like Tylenol, Band-Aids, and baby care products. While a smaller portion of total revenue, this segment is important for J&J's branding and public image. Let's discuss profitability and dividend strength. Strong revenue streams. J&J has consistently demonstrated strong revenue growth across its segments, driven by its blockbuster drugs like Stelara in immunology and medical devices, especially in high-demand areas like orthopedics and surgery. J&J offers stable and growing dividends. J&J is a dividend king, with over 60 years of consecutive dividend increases. The company's commitment to returning capital to shareholders is a key reason why many investors hold J&J for the long term, regardless of short-term stock fluctuations. J&J's resilience in healthcare. With a diversified portfolio across essential healthcare areas, J&J benefits from steady demand even during economic downturns, making it a more defensive stock compared to others. Talc lawsuits and their impact. One significant challenge facing J&J is its ongoing talc powder litigation. The lawsuits are tied to allegations that the company's baby powder products contained asbestos, which has been linked to ovarian cancer and other health issues. J&J has faced tens of thousands of lawsuits over this, and there have been large jury verdicts in favor of plaintiffs, leading to concerns over the financial impact on the company. Financial exposure. J&J has set aside billions of dollars to handle the settlements and legal expenses tied to these lawsuits. The company attempted to use a bankruptcy strategy for one of its subsidiaries to manage the liability, but this has faced legal challenges. Public image. The lawsuits have also hurt J&J's public image, particularly around the perception of its consumer health segment. The company has stopped selling talc-based baby powder in the US and Canada, but continues to defend its product's safety in court. Linking fundamentals and technical analysis. Now, let's integrate these business fundamentals into the technical picture of the stock. One, price action and 200-day SMA. The price above the 200-day SMA aligns with the company's solid fundamentals, such as its strong pharmaceutical pipeline and diversified revenue streams. The long-term bullish trend reflects investor confidence in J&J's ability to weather challenges, including legal risks from the talc lawsuits. The recent sideways movement near $162 suggests consolidation as investors digest both positive earnings growth and the ongoing uncertainty from legal challenges. The stock may be waiting for a catalyst, such as a resolution in the talc cases, to either break out higher or pull back. 2. MACD, Moving Average Convergence Divergence. The bearish MACD crossover aligns with the short-term uncertainty surrounding J&J. Investors might be cautious due to the talc litigation, which, while manageable from a financial standpoint, adds a level of uncertainty to future cash flows. 3. Fast stochastic. The downward trend in the fast stochastic shows that the stock may be facing short-term selling pressure, which could be attributed to profit-taking after a recent rise to $166. Investors may also be pausing to evaluate the potential financial impact of the talc lawsuits as court decisions evolve. 4. Slow stochastic. The slow stochastic's decline reflects a similar sentiment, signaling that downward momentum may continue in the near term. Until more clarity is gained around the litigation and potential liabilities, investors may remain cautious. Summary of probabilities. Upward probability. J&J's long-term fundamentals are strong, supported by its diversified business model and leadership in the healthcare space. While litigation over talc may impact the stock in the short term, the company's strong financials, stable dividend history, and dominant position in essential healthcare sectors suggest that the long-term trend remains bullish. Downward probability. In the short term, J&J's technical indicators, such as the bearish MACD crossover and overbought stochastics, point to downward pressure. Coupled with the ongoing talc lawsuits, this uncertainty may result in further short-term weakness or consolidation before any significant upward movement occurs. Conclusion. J&J remains a strong defensive stock for long-term investors due to its steady revenue growth across essential healthcare sectors and its commitment to dividend payouts. However, in the short term, legal uncertainties from the talc lawsuits, combined with technical signals, suggest that caution may be warranted as the stock could experience some downward pressure or consolidation before resuming any long-term upward trend. Would you like to dive deeper into the financial impacts of the talc lawsuits, or do you need further insights on the technicals? Let me know. Please like and subscribe, and we hope to see you again.